Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, just after the close on February 12th. Bid still there. Song remains the same. Small cap, small cap, small cap. You never have enough of your best trade. That's a trading rule. Portfolio managers, traders, investors always joke about. We got onto this small cap trade back in September when it started to show some relative strength against SPY, and certainly we have small cap exposure. You always wish you had more. Here we are 2 weeks into February. IJR up 15% year to date. They can cash their chips in, take the rest of the year off. Very solid. Remember, the longer a security or index stays strong or shows relative strength, the more capital will flow to that index or security. Maybe counterintuitive, but it's a fact in trading that as small caps have stayed strong for 6 months, they're getting more capital. Flows are coming out of the S&P 500 into small and mid. Haven't seen that in half a decade. Really haven't seen that in a decade. Reminds me of the 2003, 4, 5 trading. Really reminds me of 96, 97, 98 when we had some real performance out of small caps. Let's not get ahead of ourselves and say, what does that lead to? We don't care what that leads to. We want to have strong opinions, weakly held. Means we're flexible. We can change our minds. In terms of broad market activity, bring up a quick chart here. Sector bell curve showing on the far right-hand side, risk securities are strong. Not overbought to the point where we have to get overly nervous, but you do see commodities getting stretched. You see IJR, IWM, you see the Qs, good bid. Not at 120% overbought like we saw in December, but a good bid. Contra, your risk adverse securities over on the left-hand side. Gold, 10-year Treasury, 30-year Treasury, having a difficult time finding a bid. We always look at that cross asset class information. Obviously, right now, people are feeling confident. That can change on a dime. Remember, we always talk about what can go right, what can go wrong. Let's keep an eye on inflation numbers. It's really a spike that would worry us. This climb, which Moose will go over, to a 120 on the 10-year and a 2+ on the 30, orderly. And as long as it's orderly, we can handle that in the equity market and the fixed income market. It's the spikes. It's when the Fed is raising rates. It's 1994. When you had to hide in the shadows if you were a bond trader or bond salesman. We don't have that right now. Good, slow progress upward in Treasury yields is healthy. Remember, muni demand is there. We're seeing muni demand each and every day. New York Mets Stadium, 10 times oversubscribed for munis this week. Good demand. So let's have a good weekend. Market closed on Monday. We'll be back at it with you on Friday. Until then, keep an eye on the capital, risk versus reward. And in terms of interest rates, keep an eye on the 30-year. See if that 2.25 acts as a little bit of resistance. Have a great weekend. I wanted to take a moment to introduce you to Charles Metzler. Charles is our newest investment advisor at Cumberland Advisors. Charlie was a University of Missouri finance major, has passed his first level CFA, and is a certified financial planner. We're thrilled to have him. As our client base grows, we're going to be initially using Charlie internally. Speak to clients, speak to prospects, help with allocations, help with risk assessments. A very nice piece to the puzzle.
Thrilled to be a part of the Cumberland team.
Say hello to Charlie next time you're in the office or by email.
Good afternoon. It's John Mousseau. I am the CEO and Director of Fixed Income at Cumberland Advisors. It is Friday afternoon on February 12th. It is Déjà Vu all over again. A great Yogi Berra saying. Also a great album by John Fogerty, if you haven't heard it, back from about 2004. And again, we had a week S&P creeps higher. Bond yields higher. Muni yields nothing. Actually a little lower. We've been doing this now for a few weeks. Look at the 10-year bond. Went from about 116 to 120. 30-year bond went from 197 to 201, crossed over the 2% threshold. Muni yields lower by 4 basis points. So you have a 10-year bond in Muni land down to 0.69 for a AAA bond. 30-year bond down to 134. Those yield ratios, munis to treasuries, are basically around 60% or lower in the 10-year area and mid-60s in the 30-year area. You would have to go back to the Carter administration, even before my time, to find yield ratios, munis to treasuries that low. What's important to remember is back then that was a 50% marginal tax rate, whereas now we have 37. We would suggest this muni crush that we're seeing with yields so low relative to other markets is a combination of a few factors. Number one, basically not much supply at the beginning of the year. It should be picking up. Lots of demand at the beginning of the year from maturing bonds, called bonds, coupon payments, etc. So there's a supply-demand imbalance, but we also think, as we've talked about, that people are smelling some higher taxes coming. Not right away, but down the road, because the demand for municipal bonds is voracious. And it's the only way to describe it right now. Important to look at some of the economic statistics. Initial jobless claims this week, disappointing, higher than expectations, although still with a 700,000 handle to it. CPI, well behaved. Core CPI was 0, headline CPI was 0.3, both around expectations. So we haven't seen inflation pick up. We do expect it to pick up, as we described last week, as we go further into the year. If you looked at the University of Michigan survey, people's inflation expectations, though, going out a year, have risen. People's expectations for inflation a year out are like 3%. It's a long way from where we are now with a basically 1.5% core inflation. Whether we get that or not, we don't know. We will follow this next week. Next week, again, we will look at initial jobless claims. We will also have PPI and keep an eye on things because yields have now moved higher clearly from where they were at the beginning of the year. We'll see whether they keep on going. We'll see whether there's a little bit of give in the muni market. We all hope you have a great President's Day weekend. Thanks a lot.